But here's the truth, options are just tools. Calls. Puts. The Greeks. By the end of this video, you'll speak options fluently. This is episode 10 of Zero to Trader Academy.
What is an option? An option is a contract. That's it. At a specific price, before a specific date. Think of it like a coupon. If the stock moves your way, you profit big. If it doesn't, you only lose what you paid for the option. Let's start with calls. You pay $3 per contract. Maybe $6. Maybe $10. Calls are for bulls. People who think prices will rise. Now, puts. You buy a put when you think the stock will go down. Example, QQQ is at 744. You buy a 740 put expiring in 2 weeks. You pay $2 per contract. You profit when others panic. Puts are for bears. People who think prices will fall. Or for protection, insurance on your portfolio. Don't let the name scare you. The Greeks are just measurements. They tell you how your option will behave. Like the dashboard in your car. Speed. Fuel. Temperature. The Greeks tell you how fast you're making money. How much time is working against you. Delta. The big one. When the stock moves $1. Delta of 0.5 means, stock up $1, option up 50 cents. Calls have positive delta. Puts have negative delta. Delta also approximates your probability of profit. When the stock moves. Theta measures time decay. How much value your option loses each day. Time decay accelerates near expiration. That's why you don't hold weekly options unless you're trading them. Vega. The volatility factor. Vega measures sensitivity to implied volatility. When volatility crushes, Vega works against you. Earnings. Vega matters a lot. Let's put it all together. You buy a QQQ call. Delta says, you'll make money if QQQ goes up. Gamma says, your gains accelerate as it moves. Theta says, every day that passes, you lose a little. Vega says, if volatility drops, your option loses value. You need to be right. And you need to be right quickly.
Respect the Greeks. They'll keep you honest.
Let's recap options basics. Calls, bullish. Puts, bearish. Delta, price sensitivity. Gamma, rate of change.